Hey guys, welcome back to the channel. Today I'm going to be talking about the entire cryptocurrency market capitalization, and I'll be diving into some key support levels to watch out for. So I'll be looking at the 200-week SMA, the 300-week, the previous cycle's all-time high, and I'll be doing this for both Total 1 and Total 2. So the difference between these two charts is that Total 1 is the sum of everything in the crypto asset class, and then Total 2 is the same thing except it is subtracting and excluding Bitcoin. So first, let's just dive into what we got going on in this chart right now. I've got the 300-week simple moving average right here in orange. That's this line coming in around $670 billion. The green line is the 200-week SMA, which is coming in around $890 billion. That's the most critical support level to watch out for in the short term. You can see that the price is most close to this level, and this is actually where we bounced off of back here in July as well as June. So this is a level where the cryptocurrency asset class found support, bounced off of, and you can see that actually from these lows, it bounced about 50%. So it was a pretty nice move overall. And what I find extremely interesting about this move is how closely it resembled the previous move in the 2018 bear market. So notice how in this bear market, the entire cryptocurrency asset class came down to the 200-week average, and then from the lows of around $91 billion, the entire asset class pumped around 50% to this local high. Then it had a correction back down and it retested the 200-week average. So it's a pretty similar pattern here where once again, we did have a 50% move off the lows. We're coming back down and we're once again retesting that 200-week SMA. Now, if the previous market cycle is an indication of what could happen today, we might expect support to be held off this area and we could see some sort of bounce. Now, clearly that does not have to happen, and I just want to discuss what to watch out for if this level is to be broken, which is once again coming in around $900 billion. And if we start to lose the 200-week average and we start to come back below it, then the next level I'm going to be watching out for is going to be this high from back in the previous market cycle, around $690 billion. And not only is this going to be a very strong level of support because it was the previous cycle's resistance, the previous rejection, but also because it's going to be roughly around the 300-week simple moving average. Now, this moving average is going to be increasing week over week, and in a few weeks, it could reach that level where you would have some sort of confluence with this region, once again at $690 billion as a strong level of support. Now, if the asset class does lose the 200-week average as support, that would be another 22% down from the current 200-week average price. Or if we're to take it from the current lows in place, that would be about another 10% lower. So it's a fairly reasonable expectation to have in terms of a price target. If we are to lose the 200-week average, it is not an extreme value by any means. And I think it is certainly a possibility that is within the cards if the 200-week average does not hold as support and we fail to remain above this. And the key words here being if we lose it, because clearly we could have a similar pattern and structure to the previous bear market where this does end up being a higher low. It's just really going to depend on the next few weekly closes if we can actually hold and remain above the 200-week SMA. Now above us in terms of resistance, I'm really looking at these two moving averages. The red one is the 20-week simple moving average. The green one is the 21 EMA. I like to consider them as a band. You can see this is the level that we rejected off back here on this lower high in March at around $2 trillion. And what's really important about these moving averages is that historically during bear markets, this has been a point of resistance. If we were to go back to the previous one in 2018, again, this is the level where all of those lower highs formed off of. We had a rejection in April 2018, another one in August, and then this move almost getting back up to it in November, but ultimately it fell short and then had this massive capitulation-like event back down to the 94 billion range. So those are the extremely important levels I'm watching for on Total 1. Now I'm going to talk about here Total 2, which again is the entire cryptocurrency asset class subtracting the market capitalization of Bitcoin. Now, all things considered, the two charts are pretty similar, but one of the key differences here is that Total 2 has a lot more breathing room before retesting that 200-week simple moving average. And if I were to take a measured move here, another 15% or so correction down would take us to that level. And you can also see how that level would also correspond to the previous market cycle's all-time high. So structurally speaking, this does have a little bit more room before hitting some of those critical support levels. And the room between today's price action and the 300-week is actually even more significant. If I were to take a measured move here, that would represent a 37% decline, which I think at the current stage is fairly unrealistic. And I would say that if we are to retest the 300-week simple moving average, that would most likely occur in a few months when the 300-week moving average is up a little bit more. And if we were to extend out its current rate of change, you could see that, say, if we were to retest it by February of the next year, that could be around 400 billion, as opposed to retesting it today around 330 billion. So if we do have a retest of the 300-week simple moving average, it really will depend on when that happens. So the longer it takes us to retest it, the higher that will ultimately be. But again, there is really no guarantee that we do retest the 300-week average. This would just happen in the event that the 200-week average is lost as support and we are starting to fall back below it, which you can see really hasn't happened since we lost it back here in March of 2020. And one of the things that's pretty interesting is how right as we lost the 200-week average, we went straight back down to the 300-week average, and ultimately that is where the total 2 asset class actually found support off of and started to reverse. So those are the key levels to watch out for on total 1 and total 2. I hope you guys did enjoy the content and the analysis. By the way, make sure to check out our sponsors in the link in the description below. This channel is partnered with FTX.us, and it's a great cryptocurrency exchange. If you sign up with my link in the description below or through my referral code SNOWYCRYPTO, you can get a 5% discount on exchange fees. As always, I hope you enjoyed, and I'll see you in the next one.